Hey, Steve Saretsky here. Welcome back to the show. Lots to touch on this week. I want to get to some comments from our housing minister here, the Canadian-wide new housing minister, as well as what's happening in the residential development, construction side of things, how I see that sort of playing back into the real economy, because I do think we're at somewhat of an important inflection point in the Canadian economy. So I'm going to get to all of that because I do think it's actually really important as we're starting to get sort of tidbits of data starting to trickle out into the system. And so, last week we touched on it in the video that we said, okay, Canada's got a new, cabinet shuffle. They got a new immigration minister. They got a new housing minister. So the new immigration minister comes out last week, which we commented on. And he says, we're not looking at lowering immigration. We're actually considering raising the targets. We need these people. We need these people to come in, and we need them to build more housing. So, again, they're kind of this tone-deaf mentality. And again, 1 million people a year, I just don't think is the right number for this country. The infrastructure has not been able to keep up and sustain itself. We certainly need immigration, but again, I argue 1 million people isn't the right number. But nonetheless, he says, listen, we gotta keep the foot on the pedal because these people are going to be the people that come in and actually build the housing. Now, I would argue that the math isn't working. But so those are his comments. So we get the new housing minister come out this week. Now, keep in mind, the new housing minister was the former immigration minister, so a guy that I would argue is responsible for stoking the demand for housing in this country. So he's come out again this week with some updated comments. And so he says in his Bloomberg interview this week, and I quote, our goal is not to decrease the value of their home. Our goal is to build more units that are at a price that other people who don't currently have their needs met can afford. In other words, he's trying to ride two horses with one ass. You can't have affordable housing and not have prices come down. Again, I've advocated on the demand side before. I've advocated on the supply side before. The reality is the supply side, it's tough. It's tough to overbuild because there's certain mechanisms in place that are designed to throttle supply as economic conditions change. In other words, as prices start to fall, credit becomes tight, developers and builders pull back. And so you can't really overbuild to get much lower prices. You have to have some sort of demand shock. And so basically what the government is saying, listen, guys, it's not going to be politically palatable to have a housing price large correction. That's not going to get us reelected. We also need the tax revenues. Remember, this is a government that is has this bloated deficit that is continuously actually raising taxes. And so they're so dependent on, you think about the majority of taxes, they actually come from the top 10% of income earners. And that also comes from, real estate transactions. It comes from capital gains. Capital gains is one of the largest benefactors to the federal government, right? So if a house price is going up, you sell your investment property. The commercial real estate market's on fire. There's lots of transactions happening. That fills the government tax revenues. And again, you've got a federal government that is growing in size and growing in their spending as well. So they need these tax revenues coming in. So, you can't necessarily kill the golden goose. So you got to try to sort of maintain the values, but you also got to add more supply, but you're pulling in more people. So you can see where this it doesn't work. Again, he's trying to ride two horses with one ass. And so I just want to bring this up because I think it really comes to the whole point, which is the farce that people continue to believe is that government's going to somehow solve housing, and affordable housing is just political theater. And I think we're seeing this in the comments here, right? So which really brings me home to this whole point, right? So he says, okay, again, we're going to bring in these people because they're going to build the housing. We're going to ramp up. We're going to ramp it up. We are going to ramp up housing starts. And how? How, though, is my question. How are you going to ramp up housing starts in an economic downturn? You have a situation where the laws of economic gravity when interest rates go up by 500 basis points, the fastest tightening cycle in modern history, you're gonna get a pullback in capex. You're going to get a pullback in massive investment in housing, right? Think about it. If you're a private developer today and you see the writing on the wall, which is the Bank of Canada says, we need to slow the country's housing market. We need to hit demand hard. We arguably need a recession to get inflation down. So as a private developer that's about to deploy tens and hundreds of millions of dollars of their capital, what would you rationally deploy capital, or would you be very cautious about deploying it? The projects that can pencil today, you push forward. The ones that you don't need to push forward, you do your best to wait until this cycle clears. And so the laws of economic gravity are against this country's housing minister. And so he's not going to be able to ramp up housing supply. And this is one of the things that I'll point you to is we just had, for example, here in Greater Vancouver, across Greater Vancouver and the Fraser Valley, a research report came out from MLA Canada today showing that new pre-sale units launched for sale. New units launched for sale declined by 40% in the second quarter of this year. 40% decline. So basically what that's telling you is developers aren't bringing units to market. And again, why would you? The system is not designed right. Falling home prices, tighter credit, more expensive, destroys your returns. The risk reward simply isn't there. And at the end of the day, again, in Vancouver and in BC, you have certain regulations that say you must sell your quota of units. You must get construction financing upon 12 months of releasing new units for the pre-sale market. And so you have to have extreme confidence that you're going to be able to hit your pre-construction targets the banks are mandating you to. You have to hit those within a 12-month period. Otherwise, you are getting shut down. The BC government says, nope, you're done. And so you have to have confidence you're going to be able to sell your product. And this is why I always laugh, because then you have the government agency, CMHC, that comes out and says, Canada needs to add, I think it's something like 2 million new housing units to this country by 2035 or something to get like affordable housing. But if you actually read the scenario that they've outlined, they said to get the 2 million units you needed, it will bring prices down 25%. Do you actually think logically that the private sector is going to build housing as house prices are dropping by 5-10% a year? It's just this fantasy tale that these politicians and academia that draw up these unrealistic, not real life scenarios. And so I only bring this up to hopefully try to illuminate how things actually work in the real estate sector and in this economy. And so, to circle back to Sean Fraser's comments again, right? Like, we're going to ramp up housing. So the change in the 6-month rolling average of residential building permits in the country currently sits at a 10-year low. So you've got a 10-year low in residential permits. Now remember, permits lead housing starts. Right? You get, first things first is you get a permit and then you start construction. And so if permits are falling off, it's telling you that the future housing starts are going to roll off. And so that's what's coming next. And then, you start to see, you look at some of the Stats Canada data that's come out here. And so you've got, we had the big headline: the construction industry in Canada for the last month lost 44,000 jobs. The industry has now lost 4% of its workers over the past 3 months. Again, you can take it for how you want it. I think Stats Can's numbers are notoriously volatile, but that would be the largest move outside of COVID, going back to the 1990s. So there's been suddenly a big shift in the construction space, again, which kind of coincides with your residential permits falling off. But this is ultimately bring us home to the point of starting to see these rate hikes now filtering through. You're seeing it filtering through into the construction sector. Construction and real estate obviously playing a massive part in this country's economy. I think it was pretty illuminating this week to see Canadian Tire, which is Canada's largest publicly traded retailer, again, like them, hate them, doesn't matter, retail sales down 4%. 4%, and it's not even adjusting for inflation or the growth in your population. So your retail sales are actually falling. It was surprised the markets. And the CEO, who has access to an enormous amount of data to be able to see who their clients are coming in. They also have a credit card arm, a massive credit card arm actually in Canada, and coming out and saying the Canadian consumer is not in great shape. They're pulling back on discretionary spending, and we can see the financial impact that now finally these rate hikes are starting to have. And so brings me all home to the point. I think they're at that important inflection point. I think you're going to start to see more and more of the data deteriorate. Again, as one should expect, 500 basis points of rate hikes. It's just taken a lot more time than maybe I expected. I think than a lot of people expected. But it's interesting enough to see all people coming out and calling, removing the recession calls, removing the soft landing calls, now calling for like no landing. I think right is a time the economic data is actually starting to deteriorate. So we'll see. We'll see. Again, it's just sort of an observation that I have. I think we're certainly seeing it. What I can tell you in the residential real estate sector of things starting to change. But make no mistake, to Sean Fraser's point, again, the immigrants are going to come in and build the housing, but the private sector is pulling back on the capital. So I actually think we're going to see immigration, as the jobs start to dry up, will actually pull back. There's actually been an interesting stat there's actually been a large divergence. My good friend Ben Rabideau, I think he's one of the best researchers of Canadian sort of macro out there, brought home a very important distinction, which is showing that there's a huge divergence in the labor force survey between the population growth, basically saying there's this huge divergence, and he actually believes, in his opinion, that they're undercounting the number of people unemployed in Canada. Remember, these are surveys. The jobs numbers are surveys. So everybody's relying on them as like economic leading indicators, but there's surveys that actually get revised many, many, many months later. And so he argues that you were going to see these revisions. There's going to be probably potentially a surprise in actually how many people in Canada are actually unemployed. And you'll see that unemployment rate start to push higher, which again, you think about if you're the Bank of Canada, you're looking at sort of older data that gets revised 4 months later. Suddenly that can start to change your outlook on how you progress forward. So I don't know, those are kind of the things that I'm kind of watching. And I think it's there's a lot of things that are coming to head right now. So we'll see how this data sort of shapes up over the coming 6 months, the back half of this year. But as always, hope that helped. See you next week.